Good afternoon, HOLT. My name is Aakash Patel, and I'm going to pitch the idea that Siemens AG is undervalued at its current US dollar stock price of 108, and that this represents an investment strategy within the relevant time horizon of 1 year. Let us first delve into the finances of Siemens AG. The drivers of CFROI, our metric for a true economic return and value creation, are operating margins, asset turns, and sales. We observe asset turns have decreased nearly 20% over the past 5 years, which we can attribute to skyrocketing levels of asset growth, not necessarily any decreases in sales, which actually remain quite stable. Moreover, what offsets this decrease in asset turns is a 20% increase in operating margins. This suggests that Siemens has been able to maintain a competitive edge within this industry, conducive towards retaining its consumer and revenue base. Combining these metrics, we observe that CFROI has remained stable with a cool 3% excess return on the cost of capital since 2007. In respect to valuation metrics, let us look at the EBITDA-EV multiple, which attempts to provide a sense of neutrality to otherwise capital structure skewed ROI metrics. We notice that Siemens has been consistently trading at below the industry benchmark. This alone may not signify undervaluation. However, coupled with strong and increasing cash flow numbers, which is inherent in our cash flow to capex metric, strong debt ratios telling us that economic recessions have not severely compromised Siemens' structuring regarding finance, and when seeing increasing dividend yields, it is highly intuitive that this low EBITDA-EV multiple is actually a mispricing by the market and that Siemens truly deserves a higher value. Finally, let us come back to our beloved DCF. In this slide, I have developed a simple discounted cash flow model and reverse engineered the implied growth rate, 11%. Though this may seem quite liberal, there is no comparison when assessing pre-recessionary numbers, which reached as high as 34% in growth. Now that macro indicators in the U.S. are more indicative of growth and global economies are beginning to strategize austerity measures conducive towards jump-starting their respective markets, I believe Siemens' growth rate should be reassessed and be conservatively reverted back to a pre-recessionary 17%. With this forecast, Siemens' true value is $140. Taking these finances into consideration, we empirically observe how Siemens has significantly outperformed the sector, which we proxy by an international industrials conglomerate fund, EXI. Indeed, Siemens seems to perform spectacularly as a result of yearly initial undervaluation, and in virtue of the global instabilities that have plagued our economies in the past, I do look forward to following Siemens AG in 2013.